All right. Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for July 28th, 2025. We are recording this at 7 p.m. Eastern, and this is episode number 487. My name is David Kosmeter. I am the creator of TimingResearch.com, and I've arranged a excellent panel for us tonight. Um, Geoff Bysshe from MarketGauge.com is here for the first time in a few years, so happy to have him here. Also, Michael Filighera of LogicalSignals.com and Terry Boxer of TheTechTrader.com. So we're going to get started in just a second, but in case you missed this, we had an excellent event last week, 30 favorite indicators. Um, I had 30 different educators on to give presentations, including everyone on the panel tonight. Did presentations for that. So if you missed any of those, you can go to TimingResearch.com and all of the archives are there. So, all right. So let's get started for tonight and find out what everyone thinks the S&P 500 is going to do this week. That's what I have on my screen right now. So, Geoff, let's start with you. What do you think is going to happen for the week?
Um, well, I'm definitely one who's in the follow the trend camp. So I'm going to continue to expect that it's going to move higher. Admittedly, that could be a little bit of a coin toss with the four of the seven Mag 7 reporting, and the Fed and the Friday being an employment report. There's a lot of hiccups that could happen along the way, but I think that the earnings season is probably going to be the biggest driver overall, with the exception of some volatility on the given days of the report and the FOMC. But I I would bet that we're gonna continue to stumble higher, because
hmm
I think earnings are going to continue to be just enough to keep the bulls happy.
hmm
All right. And Michael, what are you thinking for the week?
Can I show my chart?
Oh, sure. Yeah. Let me stop this, and then you should be able to share now.
Okay. Let me go there, and we'll go over here. Say share, and can you see it?
Yes.
Okay. Um. Well, first of all, I'm Michael Filighera, and if you don't know me, what I share and what I usually do, and what my main instrument is I do Elliott Wave, and one of the major markets that I do cover, of course, is the S&P 500. And I continue also, as Geoff mentioned, to not fight the trend, and that the trend at the moment continues to be higher. It may feel against all odds. It may feel that it's getting a little long in the tooth. It may feel that it's getting quite overbought. All of the above is true, but that does not mean that the market is going to stop. And so currently, right now, I'm showing a daily chart, and you can see that right here is the start of a minor fifth wave. And what that minor fifth wave will be completing when it gets to the top is not only minor wave five, but intermediate wave five, primary wave five, and cycle wave three. So we're building to what many would likely call a blow off type of a top. Just we're just going, we're going, we're going. And there's a lot of factors that kind of bubble and boil underneath it. Some of them make sense and some of them don't. But it is very, very typical if you take a step back. And I'm thinking that Harry's also going to be adding into it. Maybe Geoff, you'll be as well. That when we look historically at the market, particularly the S&P, this is very, very, very typical of what you'll see when a market is in a major topping process. So I think that's where we are. But my own personal expectations for the balance of this week, I've been calling since last week, and I thought that if we got a positive outcome out of the negotiations between the United States and the European Union, as far as tariffs are concerned, that we had a very strong chance that the S&P would get up into the mid 6400s and possibly get up as high as 6500. Now, something else that I also follow is, of course, options trading. And right now there's a lot of options and they're parked up at the 6,500 strike in the SPX. And that would suggest that also at that level, it is what we would call a call wall. So there's just there, and they're likely short that strike in the calls. And so if it gets up there, it would likely present resistance. So I believe it's like a call wall, but it's also a large gamma two or something of that nature position. And so I'm right now calling for the market to kind of maybe get up, 6,470 to 6,500. And it could pop above 6,500, which it may well do simply because it's getting up there and it starts to break above what should be resistance. And that'll force a cover, that'll force a little bit of adjusting to positions. But I believe that what it's doing is it's finishing within this fifth wave. It's finishing, see the white one? It's finishing the third. And if you have any understanding of Elliott in an impulse wave comes in five. So it's one, two, three being the longest and the strongest. And you can see that it absolutely is. And from there, we do three, and then we're going to come down into four. And it all fits because, and again, what Geoff mentioned is that we've got the Fed, we've got employment data coming out the end of this week. We've got 4 out of the 7, which we've seen 2, right? And so we still have 5 more that to report. And so, and that's always going to be a coin toss. Like, what are they going to say? Hopefully, they're going to be one way or the other. So, but I think that what we're going to be looking for is a corrective phase. And then that will be followed by additional new all-time highs as the market continues to move higher and complete this entire long-term sequence. And that's
Oh, okay.
pretty much what I'm looking for.
All right. All right. And Harry, what do you think?
Let me
You
share my screen too.
okay. Okay. Okay, you
Yeah.
should be able to now.
Okay. What I wanted to show you was same chart, only it's a bar chart. But if you look at the long-term picture, and this goes back a long time, of course. Back to '09 is when I'll start this pattern. From 666, we're up almost 1,000% in 16 years. More importantly, the near-term pattern with multiple tops is calling for a move to 6,900 to 7,000. Now, and when you look at it this way, it doesn't look overbought that much. It's that matter of fact, it's just breaking out over the tops from back in here. Let's look at the daily chart real quickly. These tops in here back in December, January, February, and we broke through it, tested it, and we're moving higher. Nothing to stop this market. And you know what? Market always goes higher than you think it's going to go. It always goes lower than you think it's going to go. The trend is your friend, and I'm not standing in front of a runaway freight train. You guys aren't either. I don't blame you, but I will tell you this: if the S&P turns down, it takes out this last pullback low at 6,200. The only thing left is about 6,080, and below that, a lot of room to drop. So I'm thinking we continue to go higher, but I do want to read you one thing. This is amazing. I saw this today from another analyst, and I thought it was the most poignant technical indicator that you need to hear about. The S&P is in its longest streak above its 20-day moving average since 1997. NDX longest streak since 99. Both are within 12 trading days, if this continues, of the longest streak in the modern era ever. The most overbought the market's ever been at that point. Now, if you look at RSI, the thing that blew me away on the chart that you showed me when we came on, David, that the RSI was above the top line, and it's the highest it's seen in years. So we're overbought, but we can stay overbought. And even if you look at the McClellan oscillator, that's not even that overbought. Why? Because the McClellan oscillator consists of the advanced decline line and up-down volume. And if you take a look at it, we haven't had a real blowout 8, 10, 12 to 1 update. We haven't. So 2 to 1, 3 to 1, 4 to 1, not even that. The last 3 days, I will tell you this, though. I'm concerned. I told my people this. I've seen more declines than advances in 2 of the last 3 days while the market went up. It's very, very weak underlying market right now in terms of the underpinnings, and the underlying technical support for this market is weakening day by day. So we got to be careful. Do I think the market can go to 7,000? You and I don't know. But the truth is, the trend is your friend, and until this continues. I also want to read you one other thing. The second longest streak in the last 30 years and maybe the all-time ever streak of this being straight up. You almost never see the market pull back for 2, 3, 4 days max without any kind of significant pullback. I mean, it's really an amazing, resilient market, isn't it? And so many stocks that V-bottomed in April and then reversed that one big day of that was April the 9th, Wednesday. We went up like, let me take a look at that. Yeah. We went from 4,900 to 5,500, nearly 600 points on the S&P as one of the biggest gains ever in history, coming off of a heavy volume spike in a climax low. So this told me as soon as we do some retesting, which we did, then the market was off to the races. From the pullback low of 5,100, we've gone to 6,400. That's 1,300 points since mid-April. In about 90 days, 1,300 points. It's unheard of. So I tell everybody, keep playing it long and keep raising your stops. That's all you got to do. Analyze the trend, make sure you know where support, resistance, and your targets are. But more importantly, what the trend's telling you, where lateral support is, where the moving averages are, and when they start to break down below those levels, that's when you got to change direction and go short. Right now, I'm not standing in front of a runaway freight train and going short.
Right.
All right. Someone in the chat asked about BURL. Do you want to pull that up, Harry?
Yep.
And since you have your
Now
charts.
you can see the daily chart. The stock has got a kind of a W bottom. It's got lateral price resistance. It just broke through. But more importantly, just ahead is the December, January, February, multiple tops. So that's going to have a tough time getting through 300. That's like 298. We're approaching that. Should it get through there, not only will it break out, but it'll break out not quite to new all-time highs, but it'll give you a shot at the next target, which would be about 300 and call it 350 in that area. So if we can get above this area here, we have a shot of blowing off. I'm wondering whether, and I know you guys feel the same way, and you mentioned it earlier, that we may be in a point where we just need to blow off the market to get to a ridiculous level to turn it back down. A lot of money chasing stocks.
Geoff or Michael, do you have an opinion about Burlington?
I don't necessarily follow Burlington, but I see what it's doing, and I would stand kind of behind what Harry is talking about because of all the work that he does, and you can see it. It's just like, and so it makes sense. I do agree with the statement that money is chasing stocks. Money is trying to get in money or just play it. But the one thing that I'm noticing that is truly what I believe is in control and knows no bounds, so to speak, and that is the ETFs and the indexes and options. It is definitely the options trading. And it's in the SPX, but it's also in the ETFs. It's in the spiders. It's in the Qs. It's in across the board, and then the individual stocks that we've seen. And so we keep flipping back and forth between what I call risk on, risk off type trading, and what that is really suggesting is when we break above which we can mark as like a volatility trigger, and when the volatility trigger gets triggered to the upside, it is where we go back into risk on trading. And what that suggests is that they're selling the VIX for the cash, and then they're taking that money and they're putting it into the underlying components and that volatility, and that comes through via buying calls. So they're buying calls, and so risk on is buying, risk off is selling, and it truly pertains to what the dealer has to do in that case. And what the dealer has to do when everybody's just buying calls is they have to sell them. And when they sell them, they got to buy the underlying and they lock it in. But that only goes on for so long. And then all of a sudden you'll see a downturn. You'll see a flip in the market. And then a lot of it happens to come from just the imbalance of, if you have understanding of options, the imbalance of gamma, the imbalances of the volatility. And right now, volatility, I just need to take a look to see where we're actually close today. Close to 15. It's 15. That thing is screaming to do a sudden surge. When's the last time we saw
Yeah,
15?
it's pretty low right now.
It's just incredibly low. And so it's a setup. That's how I term it. It's a setup. But as Harry says, and what Jeff is saying is like you can't fight the trend. So it's not a time to go short, but it is a time. And this is why I applaud you, Harry, for saying this, that it is a time that if you are long, you better start protecting your profits. You definitely don't want to be sitting out there with a long position when they decide it's over. Because when
Yeah.
it does happen, it's going to go. It's just going to go. So
Yep.
It's like musical chairs. You don't want to be left without a chair during musical chairs, right?
I love that analogy as well. I think that's really good. It's a game of musical chairs. And if you happen to be the one standing when the music stops, guess what? You're out. So yeah,
Yeah. So I've got a question for you, Michael, before we go too far away from the beginning on the S&P,
sure.
because I don't have any expertise in Elliott Wave
Mhm.
um, stuff. When you say that we're putting in a top and we're pushing higher, you
Mhm.
alluded to the idea that there might be a spike higher, but can I say that that's the same thing as a melt up? Like,
Yes,
are we in
yes,
a position in your work where we could just melt up?
yes. We absolutely are. In fact, there are, I work with some algorithms that basically just kind of make suggestions, right? So they're just taking and they're scooping and scraping a lot of information and presenting a case when you know put forth your questions. And right now, there's a couple of algorithms that are really suggesting that we could surge higher.
Yeah.
And that's exactly what you're just mentioning right now. So we could surge higher. Now, I think the timing is what's really kind of questionable right now, because there's some of the algorithms are saying December. But prior to that, we should have a larger pullback
In
and then
September.
finish it.
Yeah, probably September.
Yeah, yeah, exactly. I would think that too. But when I have to put it into an Elliott wave basis, I think we're getting very close to that point. And it would kind of fit in August in a way. Now, we could talk
Mhm.
about September. We could talk about there's a lot of gamma positions. There's a lot, particularly you got JP Morgan, they got their big collar going on that they only roll per quarter. So it's sitting in September right now. And there's just a lot of other very large players that they come in and they stack this stuff. They stack these options up and down on the big quarterly expiration months. So there's going to be September and then October, excuse me, September and then December. So it makes total sense for year end. Wonder how long it's going to last. So what I add into that, even though we're very technical, right? We're all talking technical here, that we don't fight it because it's very technical and it's going to continue. So I think that if it should be sudden, it is going to be the stimulation or the stimulant will be news, some kind of news, something will happen. And I mean, this is something I toss out in the form of a question. I believe the canary in the coal mine are the treasuries.
Yeah.
And Jeff, you mentioned that we got the Fed coming. So I
Yeah.
let me toss that out. Let just say, hey, let's talk about treasuries a little bit. I think it's like they're having, and in fact, David, if I could take the chart back, I'll go ahead and show
Sure.
what I have,
Okay. Should be able to now.
and I just got to get over to the other chart. Again, I'm working on. Here we are. Here, and go back over there. I think it's like if we're really looking at the 30-year bond, first the 10-year note is the anchor. That's the one everybody looks at. But it's also the 30-year, which is it's 30 and 20, so 20 and 30. The 20-year at its latest auction came in again at 5%. Now, the first time that happened, the market just did a header, but it was just a pullback. This time, it didn't even burp. It just kept going up. So I don't think they're becoming immune to it. But I think the canary in the coal mine, I wish I could, let me see if I can pull this out any higher and go out to this guy. You can see I have been looking for this for an upside move I mean, we can go all the way from when the 30-year bond was at one point, the interest rate was 1.19. And that was at the top of 2020, just the beginning of 2022. And then we did the big slide down in the bonds, and this came down to October of 2023. And I thought that was a bottom of a fifth wave and that we were going to go up in a larger ABC. Well, we did the ABC, but we didn't get as far as I thought it should get. So I was early on this call and I put a 4, and now look at it doing the battle. And I really believe that the 30 can go below par. And par, for those that maybe are questioning, is par is 100. I believe the 30 can go below 100. Where does that push the yield? Pushes the yield well above 5%. Now, everybody else is screaming, like, no way, no way. Everybody wants lower rates. It's like, yeah, but what if it doesn't happen? So again, I think the canary in the coal mine are treasuries. And we're seeing that there's some stubbornness even in the T-bills, even in the short-term Ts, the 17-week, the 13-week, the 26-week. They're holding to that higher end of the Fed's range. So when I start seeing them getting up to four and 3/8 to 4.5, it's like, well, that's the top of the range. So is that going to give any ground for the Fed to go, hey, we're going to lower it? Or do we need to raise it? Are we getting inflationary? Are we getting, it's all going to balance itself out? There's just too much going on in there. And I find it very interesting that the market's like over in its own little world, but that's very typical of what they do. I'd love to hear what you guys think about
Well,
what
I mean,
treasuries.
the earnings, the earnings picture is one that just keeps painting a picture that things are okay. I think
Right.
that the thing that this isn't my idea. This is the Gunlock has this idea that the next recession we're going to see higher rates, not lower rates.
Hmm.
And without going down that rabbit hole, if you just for a minute consider what if he's right, that's a mess.
Yeah.
Now, the other thing in that thought process, I've never really looked at the market this way until now, but I'm beginning to feel like the 30 years is your indicator that the market just is no longer going to tolerate the deficit and our
Hmm.
debt situation. But the
Hmm.
10 year is more sensitive to the economy.
Right.
Now, I don't know if that's actually going to play out that way, but that the reason I brought up Gunlock is because Gunlock brings up this idea that higher rates are gonna show up with the recession, which that is just not normal. But if he's right, then why can't the 10 years um, act differently than the 30 years? If the 30 year is really where the fear gauge is. And so I'm agreeing with you, Michael, about look out for that 30 year, that canary in the coal mine. If that
Yeah.
starts
I
going,
think it could include the 10. Don't get me wrong. I think,
it might, yes. Well, I think if it goes to par, it's not going to go there itself. Like everything else is going to go down.
right.
It's going to go
But
there with it.
the 10 will be up at 5.
Right, but the
Yeah.
battle, like the first sign, and we saw this when the market was concerned with the deficit. I want to say weeks, but it's probably months ago now.
Right.
And then everything was okay.
Right.
And now it's holding. So, but it's just holding. If it if it drops, it could be that the 30 year, and I guess this is a long-winded way of saying there there seems to be, I think there's a battle. If you look at the 10 year versus the 30 year, they're very different charts in my mind. And
Yes.
it seems weird that they would be. And that's what's gotten me thinking, okay, maybe the 10 year is the one kind of fighting for the like it's going to do what the economy is going to do, and the 30 year is going to do what the people who are afraid of rates
Right.
going just substantially out of control higher is going to do. And that's your canary in the coal mine.
Right. I will add one more thing, which I find extremely interesting. Of course, 'cause we have all this stuff going on around our world. And the one thing that I noticed, right, because we tossed in the next layer, and the next layer, of course, is going to be gold, silver, platinum, precious metals. And the precious metals have always been, like gold, storehouse of value. So what becomes questionable here with the US getting downgraded, with the dollar, with the dollar now being sold? Well, who's selling the dollar? Well, we know that Canada sells some dollar. We know that China sells some dollars. The others are in there selling the dollar based on trade. All this conversation, all this stuff. Is there stability going to return in the dollar? Well, we see that they bought it up. On all this stuff, they kind of just brought it up, and because it's up, you know, this afternoon. But I don't. I look at what is going on, and I just think that it's like, is this the time? Is it ripe enough that the U.S. gets dethroned from the U.S. dollar being the reserve currency of trade? These are big questions. And I think when we start to see all this stuff happening in the 30-year bond, in the 10-year note, and gold stubbornly staying above 3,300, right? And every,
Yeah,
I can show you. I'm sorry, David, go ahead.
that's what I was going to ask you all about next. I know you like to follow gold, but
I
yeah, if
do.
you want to tell everyone what you're thinking about it, and then we can get
Sure.
opinions
Yeah,
from
go
Jeff and
ahead.
Harry.
I definitely will tell you about gold. I'm in a gold bug for longer than most people have been on the earth. Um, and I know, like Carrie, I'm showing my age. I Gold right now, you see, is just in this sideways consolidation period. Very, very comfortable, holding above 32 right now. So it's getting a little tighter and staying below 35. I think it's going to break. And I think it'll break to the upside. I think we go to 35 to 36, 37, 38, and we start hinting towards 4,000. We pull back again. It's not over. It's in a very longer term bull phase. And what I personally am seeing is that, the Central Bank of China, they are buying gold, storing it, they're buying it, they're keeping it, they're buying platinum, they're keeping it. Um, Central Bank, European Central Bank doing the same thing. And again, I think that what they're just trying to do is, like, they better have something in place if they're going to dethrone the dollar as the reserve currency of trade. What are they going to replace it with? They're going to replace it with the yuan, the renminbi. Are they going to replace it with the euro? They have to have something, right? So, but what happens when that happens? What does that say? I mean, I think that what the equity markets are ignoring, but the bond market is not. And Jeff, this kind of goes to that conversation. It's like, well, this is the 10-year really ignoring it. The United States has had their credit downgraded. Why? Because of our debt. And what do we just decided to do? Well, we're going to go add how many trillions to that total? So is that going to improve our situation, or is it going to lessen our situation? Do we care about the standing of the US dollar and in the international community? I don't know. But I think that there is something on the horizon, and it is bubbling and it's boiling. And so we're going to get the surge and we're going to get the break. I think gold being a storehouse of value, I definitely am looking for new highs. And I could show you fibs up to 5,000 to 5,500. Easily show you fibs up to those levels, because that's all we have now, right? These are going to new all-time highs. What do we have? Well, we've never been here before. So all you really have is fib relationships between these patterns. And they're up there and they're real.
Yeah, it's had quite a run over the last year or so.
Oh yeah. And it's been
Um,
incredible. I'd love to hear what you guys think.
Well, more than just the last year. I don't know the statistic, but if there's a pretty interesting statistic that if you compare the performance of gold versus the S&P, it's done better.
Right.
I don't know if it's 10 years or 20 years,
yeah,
but
I was just looking at that actually.
um, so I'm gonna go I'm just gonna push back a little. Um, I don't think anybody cares about the deficit, really. I think the stocks don't care about the deficit. They're not going to care about
Totally
the
agree, Jeff.
deficit
Totally agree.
until it's too late.
Yep. Totally agree.
So it's too late. I like that.
Um, and the reason I'm going to push back is just because it's easy to talk about the fear side of the markets, but I think
Hmm.
it hurts a lot of people um, when they get too scared to take any action.
Right.
And in when it comes to the deficit, um, look, the deficits are bad, but unless unless the U.S. really just completely is not just dethroned from the dollar perspective, and then um, I you guys have your charts up. If someone could pull up a chart of the dollar for the last 30 years or 40 years,
Hmm.
um, that's the perspective I think you need to argue against when you're saying that and I'm not saying you're saying this is going to happen now, but when we start talking about the dollar being dethroned and the debt bubble, who might argue with what's his name? It'll come back to me.
Oh,
The guy,
Jeff,
the,
by the way, if you want to share your screen,
I,
just let me know.
I will in a second. I wanted to get a
Okay.
couple indicators up, but for the deficit, my point to make it short, if if you run around as an investor worried that the market's going to crash because of the deficit,
Hmm.
you're going to be constantly disappointed. I think that you shouldn't be focused on the deficit. If the TLT, like you're saying, if the TLTs, if the 30 years, if they start to collapse, then the stocks are going to go down because either interest rates go up too far, and the it doesn't make sense to bet on stocks anymore, or that the economy is going to get too weak and it doesn't make sense to bet on stocks anymore. That's all you have to worry about. Like you don't have to worry about the deficit because if the deficit is the reason that the interest rates are going up, then you can worry about the interest rates. But the deficit talk just scares the crap out of people, and stocks just don't care about the deficit. They care about interest rates and earnings. So you don't have to look beyond that for these
Okay.
big picture arguments. Now let's look at the
Okay. Yeah.
dollar. If I
Yeah.
showed you this, if this wasn't the dollar and this was just a tech stock or anything,
Hmm.
would we be having a conversation that whatever this thing is collapsing and is going to hell in a handbasket?
No, it looks like a buy here.
I don't think so. Um,
I mean, it's
and
over. Look, it's oversold and it's at the moving average. To me, if that's a stock, I'm buying it.
yeah, and I think yeah, and that's not even my point, but I totally agree with you. But my point here again is the dollar um, is is a big picture, slow moving glacier.
Yeah.
And when I say we, the world, the trading world talks about it like, oh my God, we're falling apart. That like people are dumping our dollars. We're gonna be, and it totally depends on your time frame. Um, you know, 10 years, 20 years, the world will look like a very different place. Over the next couple years,
Hmm.
is everything gonna fall apart? I don't know. This dollar doesn't look that way to me. And in fact, if it comes lower,
Yep.
could be good for us. Could be good for gold. Could be good for a lot of things. So
Right.
that's just my the sky's not falling.
But I think it's a very clear statement, though. I think it's a fair statement that you're making. And I agree with you. I don't think people are looking at the deficit. I think that it's not really bothered us thus far. Right, so we're really looking, what, 20 years back? and it,
Yeah,
okay,
well, we're looking
it's there
40 like here, right? We're going all the way back
Yeah.
to 50.
on the
Yeah.
dollar. Yes, on the
Yeah.
dollar, but I'm just talking about in the deficit itself on how it's really from in the last 16 years,
Hey
just
guys,
absolutely exploded.
I'd like to say some proof
Of
positive.
course.
Proof positive is that 3.4 trillion is being added by the beautiful new big bill. No, nobody gives a shit
We did though. We did for a week,
on the upside.
right?
On the
It
upside,
it was a popular thought for a week, and that's
exactly.
exactly what
But what I
happened.
mean is nobody's worried about it. Is what I
Yeah.
mean. Yeah.
Yeah, no, I'm agreeing with you completely. It's like every time, so as a trader, having done this, you guys have done this for decades too. I came into this world as a commodities trader and got indoctrinated into this idea of gold is this great inflationary hedge. The S&Ps are gonna collapse. This is from 1990. Like S&P is gonna
Right.
collapse. You're always looking for the S&P to collapse. And the dollar is like this mythical thing that is gonna, you can always tell what's gonna happen if you focus on that. And then what I've learned just by watching things is that every time people think the deficit is going to be this huge problem, it's usually a good idea to look the other direction. Or global instability. If we have all this all crap going on in the Middle East, everything's going to collapse. These are the best times to look at stocks and say, are earnings okay? Are interest rates okay? Okay, then the sky's not falling. We're going to
Yeah.
forget about this in like 20. It
Yeah.
used to take 2 weeks to forget about it. Now it takes 2 days.
And it's still the strongest
Yes.
economy in the world by far. Still.
I did, but no, but Jeff, you just made a really good point. It takes 2 days. And to be and to even shorten that even more.
Yeah.
When we get PPI and CPI, it is showing a reaction for the first 2, 3 minutes. And that's okay, back to what we were doing. So that is an excellent, excellent point. And I don't think it diminishes the severity of what's happening,
No.
but I think it just gets ignored. And I agree with you on that. And then just to toss something in, it's like when I look at the Elliott wave, my point to everything is like, I agree with what you're saying, Jeff. I agree with what you say, Harry. We do not fight the trend. And right now the trend is still up. So you still continue to play it from the upside. But there will come a point, and I don't know what will turn it. I don't know what, you know, economic factors or what news factors are going to come in and force this market to make that change. But what I see on an Elliott wave basis is that we're completing a cycle third wave. So that's what we're coming up to. That's what that high, the ultimate high, is going to finish a cycle third wave. This cycle wave three began in 1949. Now, the overall super big picture remains bullish. It remains bullish. We're still in a grand super cycle bull run, and we're still decades, decades away from that thing ever reaching a high. But we are reaching a multi-decade high that could cause a reaction in the market or just a correction that could take us back to the 2009 lows. Now, is that the end of the world? Absolutely.
Does
It,
what would your time frame be
years.
before that starts rolling over, and does it depend
To
on
tell you the truth, I think
you
that we're
don't know?
getting close. Is it going to be the end of this year? Is it going to be 2026? That gets refined as we move forward. But I think we're close. But it's not just going to roll over. It's not just, I think you're going to have periods where it'll feel like it's getting killed, but I don't see that happening. And there are many reasons why. But
Well,
we'll
they say,
have, go ahead.
guys, that in a market like this, the stronger the trend, the longer it's going to take to roll over. It's not going to be a V bottom it's not going to be a V top like we had a V bottom. It'll be more of a
Right,
rolling head and shoulders or some kind of rounding top. And eventually,
right.
when they break support and trend lines and moving averages, and everything's in unison on the downside, I tell everybody if you're in a long term stock, the way to trade it, look at the major uptrend channel, look at the major a 10, 21, 50-day moving average, whichever ones you use. And when they start to cross over and the stocks or an index goes below those numbers, that's when the trend is actually truly turned. If you look what happened back in February, you'll see that the moving averages started to roll over. The market broke support a couple weeks later, and we plunged. I'm not saying that's going to happen, but I think the bigger the uptrend, the harder it's going to be to turn. Just like you said, it's not easy to turn the Titanic. It's going to take a little bit of time.
Right, right. Except the Titanic sank. You
Well, the
know,
market,
so,
market might do.
but no, I mean, I don't mean that derogatorily at all. I'm just saying it's like something, I don't know. None of us do. And it may not be economic. It may not be. There are many things that could take an economy and blow it out of the water. Do we have geopolitical situations out there? I mean, there's just a lot of stuff. And I'm not trying to inject fear into anybody's conversation. It's just like, okay, how do we want to deal with it? How do you want to trade it? I mean, to me, it's like there are ways that, like what you're saying here, what you're saying as well, Jeff. I said we can't ignore what's happening right now. We can't ignore that. But the fact is, it's like stocks don't care. They don't care. They forget about it within 2 minutes or 2 days. So
Well,
we just go on. We just
yeah,
keep
so
going.
it's not that they don't care now, but I think that like big picture, what stocks care about is what are the prospects for earnings, and that ties very closely to interest rates.
Right.
And so if the market believes that things are getting better in that regard, then the rest of it is just day-to-day noise. And that's what
I like
people
that. Yeah.
forget about. I
Yeah.
mean, but so and so I'll tie this to gold too, because while I'm like on this kick of like we're on this big macro conversation, which I don't know if this is where we thought we were going, but um I don't know who said this to me at one point or who wrote this, but and I wish I had the analysis that made this clear to me. Gold. Why does gold go higher? It's again, this is opinion. It's not inflation. Um,
Hmm.
it's Gold goes higher when the world is afraid of systematic instability. And that
Right.
systematic instability it could be geopolitical, but
Hmm.
that might have been true back in the 80s or the 70s when there weren't a lot of other instruments and the world was simpler and gold was a natural place to go. But now we've got all
Hmm.
kinds of other instruments that we could go to.
Hmm.
But
Hmm.
if it's currencies, like I think the best scenario for gold is when the world is thinking we have systematic instability and where else am I going to run for literally like a currency? And now sometimes inflation can cause that, but by and large, um, that's not generally what's going to cause the same kind of global systematic fear.
Right. No, I agree.
Um,
Um, Let me ask a question though. I mean, and again, this is great information. I eat this stuff for breakfast. But the question is, do you trade options?
yeah, and I have questions for you about that, but I don't trade. Yes, I'll say yes. Keep going.
And because to me, the increase in the options trade and the professionals, so the amount of money that is flipping around in all our options, the availability, there's options on everything. And our expirations have gone from zero DTE to weekly to monthly to quarterly and everything in between. And so I really have found, and I am an ex-market maker. And what I really have found is that the development and the flip from human beings coming up with these trades to algorithms coming up with these trades and the ability of these algorithms to put these trades on way before your brain can figure it out is incredible. And the amount of money that gets parked, like I said, it's like, I've got this call wall sitting in the SPX up at 6,500. Doesn't mean it's going to sit there. Doesn't mean it's going to stay there. But that's where they have parked it because someone is either, and it becomes a magnet for other algorithms that will be buying. They're like, well, there's a bunch sitting up there at 6,500. So if anything, if the bottom line falls out, I'm just going to, that's where we're going to go. It's like it magnetizes it and gets it to go up there. And it's nothing more than just a function of the market, but it's happening. And so when you're seeing that the nominal value of a lot of these gamma positions that are being put out there and that come up to an expiration, for example, we had the June expiration was like $1.3 trillion in the SPX. In the SPX.
It's crazy.
Yeah, it's crazy, but it's true and it's there and it's rolling and it's real. So what do we do? Do you want to fight that? No, I do not want to fight that. So Harry, that's why I bring you in. It's like, okay, you don't fight the trend. And Jeff, you said the same thing. I'm not going to fight the trend. And how long do they really focus on this stuff? Minutes, minutes. So these are the changes that I'm seeing in how we trade and what we trade and why we trade. But because we're dealing with individuals, no, I'm not going to tell you that the world's going to fall apart until I see the money leave the market. When it's suddenly not at $1.3 trillion, that it's like a lot less and it's not trading and it's getting thinner, besides it just being summer, when I'm not seeing that amount of money, then I know we're in trouble. That something's up. But
Yeah.
in the meantime, we keep going. We have no other reason.
So you asked me if
I always tell everybody in my room, guys, never anticipate the trend. Never. And my favorite expression, and you'll see me make in my market commentary, I do a technical briefing every weekend, that trade what you see, not what you think. Don't think about what the market will do. What you got. I trade markets every day. I come in and we see fresh new patterns. And we're day traders. I trade 1 minute charts, but I'm also doing swing trading. I don't care where the market's going to be or the bonds are going to be 6 months or a year from now. And the fear of missing out for most people, they want to be in the market and they're trading now. That'll change. You remember in 20 when the market crashed. I mean, in 2000 when the market crashed, everybody bought that first pullback. Then it bounced, and then it took out the lows. At that point, that was where you needed to, be stopped out. That's the thing I tell everybody. You won't get hurt if you know where to place your stops. And when you're trading, it's a must. All it takes is one lousy trade or one bad trade to go against you, and it can wipe out your entire capital. Capital preservation in this kind of a market is key.
Yeah. So
we had one more symbol question in the chat. ABVX. Harry, is that one that you follow?
Yeah, sure I do. If it's a volatile stock, I probably do. Here's the problem with ABVX. This is not a stock I would trade. It's a major gap up on big biotech news. But did it go anywhere? It's been sitting here for 3-4 days. Now, if it broke above 73, which is the high of the entire range, then maybe it'll be 80, 85, 90 or more. But for me, let's drill down. You're not seeing my chart, are you?
No, I can stop my share.
Okay.
Okay, you should be able to share again now.
Okay, hang on a sec. Let me 1 sec. Okay, share.
Are we trading ADRs, Harry? Do you know?
Say again?
Are these ADRs or is this?
No, it is a foreign company, a French company, but it's a biotech company that had amazing drug results. I think an FDA approval. It traded 4 million shares. Doesn't sound like a lot, but the average daily volume on this stock was about 20,000. So
it's huge. Yeah.
Good. Yeah. Anyway, but the bottom line is, I want to bring that up just a minute. Let me get the share again. I'm having a problem sharing my screen. My bad. All right, let's see. Share.
There you go. It's coming up.
Can you see it?
Yep.
Yeah.
Okay. Well, here's the bottom line on the daily chart. The one thing I will tell you, folks, check this out. Always go back in time a few days. I want you to see this. Look at that beautiful inverse head and shoulders pattern. two left shoulders and two right shoulders. I'll show you in the second one here. Just a second. Right there. See it? Boom.
Yeah.
I told on my weekend webinar that day, I said, keep your eyes on the stock because if it breaks out above 9, it could be a $12 or $15 stock. Little did I know they get FDA approval and it would do this. Boom.
Hmm.
Okay. So
So,
that's how
yeah.
kind of stock. Yeah, we had one like that today. And that was CLCC, CELC, excuse me. Take a look at this. And we showed you that early on when it came on. It popped,
Yeah.
or it went vertical. And there was a chance to trade it here. I want to show you this. My people bought it when I told them to buy it right on this breakout right there. It's 17. And trading was
Wow.
halted. Trading was halted, and it went ballistic. So
Wow.
what? Sometimes you get lucky, but the bottom line is that ABVX, you got to wait for a stock to develop. Now here's what's happened in the last few days: down, up. It's just meandering, but it's doing it in a tight range that looks
Hmm.
like this. Very, very tight range. That's a good sign. When a stock gaps that much, literally goes from 10 to 60 or more, 70, 73, and then goes sideways, it's usually a good sign it's consolidating for the next leg up. The news was
Right.
huge. So, but is it a tradable stock right now? Not for me. Not until it makes its move.
Right.
Yeah.
Right.
Okay. Unfortunately, we're close to running out of time already. Harry, do you want to go ahead and tell everyone about your site and your room while you have your screen share up?
Yeah, let me get my share. Just a sec. I don't see my share here. I'm sorry. So,
Oh,
oh,
I
yeah,
see
okay, I got it.
STEM.
I got it. This is what I want you to see. This is yours truly.
Oh, we're still seeing charts.
No, hang on, it's coming up.
Oh, okay. Okay, there. Yeah.
Okay. Now that's my site, techtrader.com. My big belief is that people just chasing stocks all the time. They don't know what they're doing. In my site, I give you focus lists. I give you buy alerts. I tell you what to buy. I tell you where to sell it, what the targets are, what the stops are. And all day I'm doing new live webinars with my traders and showing them how the charts are progressing during the day. The number one thing is not what to buy it, but when to buy it. And more important, maintaining that stock. You have to work. You have to raise your stops. You have to draw your lines. You have to be able to know what the trend is telling you intraday because it can change like that. And we see that all the time. So come to my
Right.
site for 10-day free trial, no credit card. Just sign up and join us and make some money. Most people tell me they make enough money in just a 10-day free trial to pay for a year's subscription. So come join us. Some very sophisticated traders, some very brilliant guys have been doing nothing but trading for the last 20 years. And some of my subscribers have been with me that long, more than 20 years. So I think you'll enjoy it and come by and see us and see what you think.
All right. Thanks, Harry. And Jeff, do you have anything you want to share with the
Yeah,
audience?
so I want to share I'm going to be selfish. I want to share my screen and ask Michael a question about the
Sure.
options because he asked me if I
Sure.
trade options. I do trade options, but what I was going to say after that was not nearly to the extent that people understand all this option positioning. I
Hmm.
totally agree that the options are driving the markets in such an incredible way. I got
Yes.
hooked into the 0 days when I realized how just messed up and yet predictable these crazy moves are in the
Hmm.
last hour, a
Hmm.
couple hours of the day.
Hmm.
But I'm showing you a chart here. So I'm coming from marketgauge.com. So if you want to check out what we do at marketgauge.com, and I do mentoring the first couple hours of the day. And we do all kinds of webinars. So go to marketgauge.com. Like I said, this is selfish for me. This is one of the things that we do that I don't see anybody else doing, which is we look at these ranges in July and these ranges set up by January. And when you were talking about the quarterly options positions, it
Hmm.
got me thinking maybe that's why these lines work so well. I'm going to tie
Hmm.
this back to the majority of our conversation, which is, well, when does the market start to roll over? Is is what we're experiencing now something that could fail? If we get below the July low, now this isn't
Mhm.
this year it happens to be the low of July, but the way these are calculated are the first 10 days of the month, and you just
Mhm.
look at the lines, and if you're above them, you're bullish, if you're below them, you're bearish, and the pink and blue are July. This is such an easy indicator for the second half of the year. If this market's
Mhm.
going to fall apart, first it's going to get through the July top range, and if it
Yep.
gets below the July bottom range, it's it's just bad news, like you can see down here. It's easy to understand with January because if you think about the psychology of markets, if you're up in the beginning of the year and then you go down on the year after being up, what are you people thinking? Oh crap. And they start puking, right? That
Right.
the same thing happens in July and August and into September. And so that's the
Yeah.
line, the July low. Is there an
Yeah.
option reason why this would happen?
Yes.
Well,
In
okay,
my in
we'll
my
have to
view,
talk about
yes.
this then. We'll have to talk about it because I don't want to take up the time now, but you know what I
Yeah,
mean? Like,
I do. I do know
Next
what
time.
you mean. I do know what you mean, and it is an options conversation. And what I will share with you, Jeff, just briefly, check out spotgamma.com.
okay, I will.
That that will explain a great deal. I highly recommend as option traders that it's get into that information and how it comes about and what and how things get pinned on a Friday.
Oh, I know that. Yeah, you don't even have to convince me. Like I've traded options, like the whole pinning concept and options doing it for
But
sure.
this will show you what you can watch so that you will get a clear insight. Oh, that's where they're going. And here's why.
And
You will
why does the
see the
market tend to
position.
fall
You will see
apart?
the position. I love the lines that you've drawn there. And
Like
yes, I
it's
can
like
tell you, I just right now, 580, 570, I know why. I can show you those long-term positions that are sitting down there that if they get broken, you don't want to be below it.
yeah, and for me it's not like the numbers on the screen as much as the patterns during the year. Like
Yeah,
to me, I can explain the July range, the pink and blue lines like this.
yeah.
It
Which is
earnings,
why I turn around and then I talk about the Elliott. I can't
yeah.
tell you what's going to cause a larger correction, but I'm going to tell you if they start to break these levels, it's going to happen. Why? Because there's a big, huge shift of capital.
And I would say there's a big, huge shift of capital because it's the emotions of the markets that are driving it.
Amen.
And then the
Absolutely
emotions
correct.
are being driven or are influenced by the calendar.
Yeah.
That,
Yes. Oh, we could
so
have a great conversation, you and
yeah, we could because I don't
Y-
like all the gamma stuff. I'm like, oh Jesus, that's just way too complicated. I wish I knew
It
because
actually
it would
isn't. I'd love to explain it to you because
uh,
it isn't. You would go, oh,
yeah, that would help because I can explain why these lines works in terms of earnings and stuff like that,
sure,
and sentiment, and to Harry's point, it's like if you know how to read the market, you really don't need to know all this stuff. Just the market will tell you what it's doing. But if you kind of
absolutely
know
correct.
why, it makes it easier. So
Yeah. Oh no, but you're right. And it's like what Harry says as well. It's like the market is going to tell us. And
yeah,
even I say it when I'm doing my analysis. Folks, I got to stand back, but the market will tell me what it's doing.
yeah.
So yeah.
All right.
All
Well,
right. Thanks, Dave.
um, unfortunately, we have to move
You
along
go
here.
ahead and end
But
it. You go ahead and end it.
uh, Michael, did you want to share anything about what you're doing?
Sure. I right now, folks, I do daily updates. I have two YouTube channels, but I do morning, afternoon, etc. Updates. But I'm in the process of revamping things. Um, that you say on what David is showing right now, join the live stream here. Hold up on doing that because it's going to be into a trade room. That's what the live stream is, a trade room. And it's going to be really based for day traders, swing traders, day traders, because we're in, out, we've got goals every day. And so I'm not a long-term trader anymore, but I pay very close attention to volatility triggers, to call walls, put walls, to all these gamma positions and what they mean and what happens when they get taken out to the upside or taken out to the downside. And so I'm going to be opening up all my publications again, uh, just to the general public, and then going back to a trade room. So more on that, and I'll be putting out stuff via YouTube on that. If you have any
All
questions or you
right.
want to talk to me, Michael at mgf1partners.com. I
All
love
right.
questions and I always answer.
All right. Sounds good. Thanks,
Awesome.
guys. Great conversation tonight. So just a quick reminder for everyone, be sure to go to TimingResearch.com. This post at the top of the page will become the archive for today as soon as I can get it processed. Also, the 30 favorite indicators event, the archives are available to review at any time there, as is all past shows and events on TimingResearch.com. So just want to thank my panel again for today. Um, um, Michael Filighera of LogicalSignals.com, Geoff Bysshe of MarketGauge.com, Harry Boxer uh, of TheTechTrader.com. So, all right, thanks everyone.
Thank you,
Thank you,
David.
everyone. Enjoyed it.
Yes.